Okay. Hello, everybody, and welcome back to another video from the Investor Diary. And today we are going to look at the trade that we opened today and why we opened it, and how accurate were we in implementing our trading platform. The trading platform that I'm talking about is my personal one, which I developed, which consists of my trading philosophy, my strategic objectives, methodology, and trading plan. Yesterday, we did that exercise with the USD JPY, and that trade is still open and going heavily against us, as well as the GBP USD, which we opened today, and it is going against us as well. We will look at why we took this trade and what is happening, this trade meaning the GBP USD, and we will look at what is happening with the USD JPY. Why we took that trade is in yesterday's video. We will not be repeating those because it will take a long time to explain both, but yesterday we explained in detail why we took that trade based on our trading platform. So let's remind ourselves of the trading platform first. Okay, our philosophy. We will talk about the philosophy and the trading plan, the selling conditions. Both the GBP USD and the USD JPY are taken as sell positions, and this is really funny. And we will talk about how it is funny because normally those two are opposite to each other, but between yesterday and today, the signs were that both are going in the same direction. Of course, in reality, that is not the case. Let's move on. So my trading philosophy is trade within the methodology and according to plan, trade for a maximum of 3 hours. Actually, today, maybe the session was only half an hour because GBP USD is the second pair that I look at. I found the trade, took it, and that's it. I closed the session. I did not look at the other pairs because I already have two open trades and I will not have a third one, especially with the circumstances that are happening now. I want to remind everybody that I am on a demo account and I will not be moving to a live account until things appear that I can be consistently profitable using one methodology and the plan consistently. And that plan is being profitable on consistent basis. So the third one is this is that we have two controversial parts of the philosophy. This is the first of them. No stop loss with the condition to monitor on daily basis. Then we go avoid trading on Fridays till today is Thursday. Sorry, today is Wednesday. Decide on daily return, which is about 30 to 50 pips per day. Challenge having no 30 to 60 pips a day. Challenge having no losing trades. And this is the other controversial thing. I'm trying to avoid having any losing trades, which goes against anything regarding trading, actually. But I want to test that. So our trading conditions for the sell positions are as follows. Check and update the daily and 4 hour market structures and check if there is a reaction on a point of interest. If there is a reaction, then create a market structure on the 15-minute. The 15-minute stochastic D should be just crossing down the 32 bound. The 4 hour and the daily stochastic are downward with the K below the D, or it is below the 32 bound on the daily and the 4 hour. The 4 hour daily and RSI, this is very important and crucial. Sometimes on this one, if the daily is with the trade and the 4 hour is not, I might just ignore the fact that the 4 hour is not. So the 4 hour and the daily, but I'm discovering with this one, just let's stay on this one. I'm discovering that ignoring this, that means I will have to bear the fact that that currently the price might go against me, going up and then going down, and this is what is happening actually with the GBP USD today. So the 4 hour and daily RSI should be below 50 and below their respective averages. and this is the RSI. The 15-minute and 4-hour chandeliers exit indicator, this is an indicator. They both need to be showing a sell signal, and this is one mistake that we did today. Check the EMAs, support and resistance, for either more confirmation or take profit areas. So the take profit distance, if there is a POI involved, then 50 pips or open. If there is no POI involved, then 30 pips. Okay, so those are the conditions. Let's play those conditions on our today's trade, the GBP USD. We did that yesterday on the USD JPY. So let's check the daily. The daily market structure is that it is going down to this liquidity, to this inducement, the liquidity under the inducement. And so it is going down on the daily and the 4-hour GBP USD. It is also, well, the magnet is that it is going down to get this 4-hour order block to go up. So both market structures are going up. This is a change of character to the upside. This is also a change of character to the upside. This on the daily needs to go down, get liquidity at least from the inducement, and this needs to go down to get this order block. But see, this order block is sitting just above the daily inducement. Therefore, this might not be respected. In any case, sometimes the price might come here, make a reaction, and then continue going down. But just in case, the trade that we opened is just above this level. But we are way above the pip limit, because it involves a POI. There is no reaction from a POI. The fact, this is another thing that we're not following today, the fact that we will keep an open or a long trade is only when there is a reaction to a POI. In both cases, there is no reaction to a POI. A reaction would be something like getting, for example, on the daily and moving and see evidence of going up. Or from the order block here and moving up. So this is an evidence of a POI reaction. Currently, we do not have a POI reaction. Still, we extended that. Maybe it is an emotional reaction to what is happening to the USD JPY. This is what I'm assuming, that emotionally I want, if the USD JPY is going to stay in the negative and I will not have a choice other than closing it on the negative, then I might have this as compensation. So this might be emotional as well. So this is from a market structure perspective. Both of them are going up as market structure, but they need to take liquidity from this area. Until now, this is the area of liquidity that we are talking about, that we are assuming that the price will come down to grab this liquidity, especially from the daily inducement. And in both cases, if they do that, then we have our trade, our take profit taken. So let's look now at the RSI. Let's look at the stochastic. The stochastic, we have a flip to the downside where we are saying that this is with us now with the trade. The 4-hour is going up. Now this is what we went against the plan. And we thought because of the RSI and the stochastic, we can ignore this, especially that before the trade. Let's look at the RSIs. We said both RSIs on the daily and the 4-hour RSI should be below 50 and below its MA. We still have the case on the daily, but on the 4-hour, when we took the trade, it was below the 50 and below the MA. Now it moved above the MA. And this is, again, we are seeing a trend going up on the 4 hour. But we ignored that fact because both RSIs were below their averages and below 50, and the stochastic was going down, in addition to the fact our theory of going down to get the liquidity. We also looked at the chandelier's exit. It was beginning of a sell signal here, and we got encouraged by that because we have a beginning of a sell. We might capture a big movement here, but again, we are not going to stay with the whole movement. If there was a movement, we are going only to capture this level. But we got encouraged with this beginning of a sell indication on the chandelier's exit indicator. We have also another sell signal on that same indicator on the 4 hour. Let's check the support and resistance and the exponential averages. Let's clean it, and let's have we have another encouraging point, which is it broke this level. It broke it as resistance and went back below it, then retested, and then went down again, which gave us more confirmation of a price going down. Still, with this yesterday's reaction, there is a reaction here on yesterday's candle, that it went way below, and then this okay, it went all the way down, and there was a buying reaction to get it to the middle of so it closed in the middle of the candle. That is an indication of a buying force. But still, all the other indicators, as I said, are encouraging and giving confirmations of a downward moving price. Let's look, and this was scary as well, and I ignored it. We only have the 20 above the price. All the other averages, exponential averages, are below the price, and could be, like, for example, yesterday's candle was a reaction on the 50 EMA. There, it still did not reach the 200, but currently the 200 is on the daily is below our take profit, so it's fine. We're fine with that. We just want the price to break the 50. On the 4 hour, let's clean this and get the support and resistance. We have a support here, which is not a very strong support. Okay, the volume of that support is not high enough, and you can see it's basically kind of transparent, not very transparent, but it's not as solid as this one. So we have this support, we have the resistance here. Will it go back? We kind of do not see it happening, that it will reach to this resistance, but no one knows. Anyway, so this is on the support and resistance. Let's look at the averages, exponential averages. Now now when I took the trade, the price was below the 4 hour. The price was below the 200, and that was relaxing. But now it went above, and this is going to be scary. Now, if this becomes a strong support as its nature, then it's going to be really dangerous. That, with the fact that the RSI went above its average, it's not looking good. But we're hoping that this will rectify, and it will break it, like it will go down below the EMA, because it already broke it down. So we hope that this will happen as well. So this is on the 4 hour and the daily and the 4 hour, and you can see that we have one We did not take for our stochastic into consideration. Two, we did not take the EMA's position into consideration, which we usually do and we should. Once we see the EMAs are interrupting the movement of the price, then we should not take that trade. This is my rule. So now the price is going down back to the EMA. It's still above it. We'll see if it has the force to break it. But the volumes during the last candles, we don't have enough volume, and the selling volume is not that much as well. If there is volume, it is on the green candles. The red candles, they don't have volume at all. So this is another scary indicator. So let's move to the 15 now. When we move to the 15, we move this to become the 4 hour and this the 15. So the other, now when we took this trade, the rule, remember that it should be out of the 32 bound. We took it before it reaches the 32 because of the other indicators. We thought to catch it early and to catch the early as an early bird price kind of thing. It actually went down below the 32, but right away the price movement wasn't that big. So we have only small candles again. We have big volumes here on the 15 above its average, but now it's moving below its average. And now look at this we have a big candle but low volume, and this is not a very encouraging point. At least the RSI on the 15 is going down. We might not have, by the way, we might not have time to talk about what is happening with the USD JPY. We might just give it a quick look if we finish this early. But we only have 3 minutes left on the clock. The other mistake that we did, now all the prices here, all the averages here are below the price. When we took it, yes, they were the same. I want to check if this is the same when I took it. I think it was the same when I took it. The EMAs were below the price, and this is another concern. Now, the major mistake was that the chandelier's exit was a buy. Now, our triggers is that the chandelier on the 15-minute and on the 4 hour, they need to be sell. Now, I took the trade without looking at this chandelier. I only clicked on it after the fact, after taking the trade, and I found out that it was a buy. If I looked at it before, I think I wouldn't have taken, I know I wouldn't have taken this trade. But these are the mistakes that happen with urgency, without taking the time to study the pair completely. So this is this is why we took this trade. These are the reasons. Now, is it going to go opposite our direction? Maybe, but at least we have this 200 EMA as support to stop it from going further, hopefully, and to go down to grab this liquidity. We are kind of more positive that it needs to get that liquidity, that it will not go beyond this level before getting that liquidity. On the USD JPY, let's move quickly. Let's look at the time. We still have 1 minute. The concern that we had yesterday, let's go directly on the I want to go on the 4 hour. This is the 4 hour. Yes. Yesterday we said our concern was we were hoping that this will not get to this resistance and then move back. It seems to me that it is going on its way to that resistance. So hopefully not still, but I think it is on its way to go to that resistance. Maybe the difference in between the USD JPY and the USD between the USD JPY and the GBP USD is that this will go down and that will go up to the resistance, and then they will reverse maybe. So this is it for today. We can see that I'm not applying my rules in a very coherent way. I need more training on better implementation of my plan. Thank you very much, and see you in the next video. Bye bye.